is that you have these very fast AI native companies such as Biorce, right? Who are obviously exploding if you look at their growth story. We're redefining our investment criteria and where we would like to invest every month. And so why we're doing so, it's because the market is very competitive, right? Because these 15 names, everybody knows about them. Then the question is like, what does it really automate, right? You can automate manual tasks, the judgment, the decision making, the relationship building with entrepreneurs. It cannot be automated. Other SaaS companies, right? Traditional SaaS companies, which are not bad businesses, but the question is, what are the ones that will benefit from AI and not be disrupted by AI? AI is creating its own market because it's not tapping into the SaaS budget, it's tapping into human labor. And so I think this is where the equity story is very powerful, right?
I'm Pedro Coelho, your host, and this is The End Talks. In this episode, I'm joined by Anne-Charlotte Philbert, Managing Director in the Growth Equity Team at Eurazeo, to discuss how they are recalibrating their approach in time of AI.
Anne-Charlotte, welcome, also known as AC, so I'll treat you as AC just to make it easier. Obviously, I know you, or got to know you reasonably well, I would say, over the past months, but for those that don't know you, can you give a quick introduction to yourself and I guess a little bit around Eurazeo as well?
Yeah, of course. First, thank you very much for the invitation. I'm thrilled to be here with such an incredible company as yours. So, quick introduction about myself. My name is AC, as you said. So, Anne-Charlotte in French, but it's too long, so we decided that we would cut it to AC. I'm a managing director at Eurazeo Growth. And what Eurazeo Growth does, so we are the leading growth equity investor out of Europe. We have $5 billion asset under management, and our mission is to build the next generation of global category leaders from Europe. And on top of that, we are part of the larger platform, which is Eurazeo. It's a private equity platform with $40 billion asset under management, which is pretty international between the US, Europe, and Asia.
How was it that you managed to become one of the youngest MDs in Eurazeo and probably one of the largest funds in Europe? And I'd also say probably one of the first female ones to do that. So how do you get there?
It's a long story. So I think maybe, if I take you back in time, when I started, and maybe, about my personal life as well, because I think some of the events that happen in your personal life shape how you become, a professional later on. So, I grew up next to Paris with two sisters, my parents. I've been a nerd since, I think I don't remember since when, maybe 3 or 5 years old, but it would be too much. But since very early days, I've always been passionate about science, very curious as a person, doing a lot of sports, competition. So I think I had this kind of personality, being curious, loving competition, that are kind of the, I would say, the backbone of being an investor. And because I always followed my passion, it got me into engineering. So I studied engineering in the US and in Europe. And so after that, I realized, okay, I was in the US, in the Silicon Valley. Actually, I was studied in UC Berkeley, California. I saw, this level of intensity, of ambition, of people building, the future of what technology would become in the next few years. And it really triggered something in me that I wanted to be part of this ecosystem. So what I did next is actually to build my own startup for 2 years. It was a great learning opportunity. The first thing that I learned is that it's tough. So I have a lot of, I would say, fascination for founders like you that make it. But myself, so basically we did not make it. We spent 2 years doing cold callings from Europe to call people in the US, potential customers, from noon to midnight, just to get, a first introduction call and to sell our products. It was very tough. So it taught me that first you really need to get yourself out there, to be bold, to try stuff, to fail, to learn, and to be resilient. So I think it was the first experience that really shaped my professional career in a way. And then after this experience, I decided to jump on the other side of the table, the VC side of the table, which is much easier in a way. And so I got into Eurazeo growth when we started the strategy at Eurazeo. So it was also an entrepreneurial journey, which is, as you think about my background, very consistent, I would say. And I loved it because we had to build the brand. Growth equity in Europe was not an asset class that was known. So we needed to educate people to show that Eurazeo growth was something, appealing to entrepreneurs, and also build the team and the strategy, right? Like nothing was established. So it was kind of a blank paper here. So we did that for the past 10 years, and I think we've been reasonably successful in doing so. So to your question, I think, having the opportunity to be at the right time, in the right markets, working very hard towards, being successful with the team. Obviously, it's not just my success, it's the team success, got me where I am today.
You're just referring to team success. And one of the things I remember when I first met you that you talked often about was this amount of work you do from outside in, right? Which for those that don't know is a huge difference from a growth asset class to like a early stage asset class of a VC, right? I mean, you don't flag companies in early stage from a ton of outside in work because there's also probably not that much outside in work to do in a pre-seed company or in a seed company, right? And I remember you mentioning that the team was so crucial for that outside in. So what differentiates Eurazeo versus others in outside in work? How did you think about that? How did you come up with this idea that you needed a team to do that, to leverage that outside in work, to be able to flag the next big growth companies ahead?
Yeah, it's a very good question. So as we scaled, we also learned from our mistakes, from the successes we had about what playbook was actually working well in growth equity. In growth equity, it's not like a VC. You know who are the good companies. I mean, if you're a good growth equity firm, you have the right connection, you have the right intelligence, you know who are like the top 15 companies you want to invest in a typical year. So the whole job we have is to get access to to build conviction about these companies, and second, to get access to these companies. So about building conviction, this is exactly what you said. We're doing a lot of research in our team to make sure that we are spending times on the right companies, the right topics. And how we do so, we go very deep because we're investing in a technology market that is more and more complex, right? We're talking about AI, we're talking about physical AI, so robotics. I'm actually doing a big deep dive on robotics right now, reading a book of 300 pages about how a robot works. I have an engineering background, right? But it's still very deep and complex. So you need to have this level of intelligence to make the right decision, but also so that when you get in front of the founder you want to convince, you have the credibility that is needed so that this guy can tell from the first meeting, okay, they know their shit. They've done the research. They are very serious about my business. I can see I can work with them. And so why we're doing so, it's because the market is very competitive, right? Because these 15 names, everybody knows about them. So you need to be pretty good at actually convincing the founder. And so our team is actually right now specialized by sectors. So myself, I cover life sciences and physical AI. We have some people covering cybersecurity, some people covering DevOps, some people covering data infrastructure, and this is how we build this intelligence internally.
Interesting. It's a whole machine behind deciding where to deploy your capital at the end of the day. Right?
Exactly.
And what has changed since AI became probably the hottest asset class ever in, I guess, questionably the history of investment? What has changed for you, even as an investor on the other side of the table?
So two very good questions. What has changed in the market is actually where we invest, where we can invest. We're redefining our investment criteria and where we would like to invest every month. It's a moving topic, and every fund out there is asking themselves the same question. Because what we're seeing is that you have these very fast AI native companies such as Biorce, right, who are obviously exploding. If you look at their growth story, then there is always the question of like, okay, how durable the growth is. Can we project ourselves in 3 years from now, what the business will look like? So these are questions that are, I think, in the minds of everyone in the investing industry. And then you have obviously an emergence of a lot of deep tech companies, especially in defense, like Helsing, ICE, great companies. But it's a shift, right? Like we were investing in SaaS for 20 years, and now we are looking at deep tech companies with hardware, a lot of capex, and not the same unit economics. So we need to shift mindset again. And then the last part is obviously this other SaaS companies, right? Traditional SaaS companies, which are not bad businesses, but the question is, what are the ones that will benefit from AI and not be disrupted by AI? So we're thinking a lot about this, and on our side, we are more towards investing in AI native companies with exploding growth or in deep tech companies. And the second question was about how we redefined our job as investors with AI. So we actually did an hackathon 2 weeks ago with the team, and everyone for a day had to build a product in one day with using Claude. So what was very interesting to me, a few points here. One, everyone in the team participated, from our PA, like assistant, to the head of growth, which I think is amazing because it shows that everyone can adopt AI at every level of the organization. Second, in a day, you can actually productize something pretty good. So yeah, I was very proud of our team and what we did. And myself, because I have an engineering background, for me, it's kind of like I cannot not automate the tasks that I'm doing on a day-to-day basis. It's driving me crazy because first I need to scale myself, and I can do that now with AI. And second, if you don't do it, you will become obsolete in 5 to 10 years from now. Not 10 years, actually, in 5 years from now. So we are very serious about adopting AI at every stack of the organization. Then the question is like, what does it really automate, right? You can automate manual tasks, the judgment, the decision making, the relationship building with entrepreneurs. It cannot be automated.
For sure, it's still a people business at the end of the day, I would say. So
Yes.
that part is the toughest part of the job. You talked about, let's call them my hyper-growth AI native businesses, right? Because I feel there's still a difference between normal AI native businesses and the ones that are seeing the hyper-growth. And from the inside out, I guess. I was going to say the outside in, but not really, because I'm inside one, so I can't say that it's outside in. What I've looked at my peers, what I see is that each of us have an ability to stay ahead of the curve of what comes next. We are always launching the next trend of the product. You could say we are making the trend. That's another way to look at it. But I don't like to think that we are dictating. I think the technology is dictating, right? We are just able to build what's coming next, and that becomes the trend. And if I look at the Gordon Harvey, if I look at Biorce, if I look at many other examples, the moment people catch up, we already did it, right? Like we've already done that. We already sold this by the time everyone starts talking about it, right? I mean, we were selling protocol generation a year and a half ago, and now everyone starts talking about it, right? And there's a big thing about having this reputation of being ahead. So how much, when you're investing in a hyper-growth company, are you looking at these data points and thinking, can they stay ahead of the curve? Because that's the only way to sustain that
Yeah.
growth you're talking about earlier.
This is a very good point. I think we are underestimating the power of being a first mover in a market. Why? Because you learn faster than the other. You learn from the sales cycles, the customer relationship being embedded into the workflow on a day-to-day basis. And this is even more true with AI, because what AI does is it learns by itself, right? If you look at the SaaS product wasn't learning from every user interaction. You can have network effect, but the product itself doesn't become like better at giving you, new results as you have more user on it. So the probabilistic, I would say, approach of AI makes it actually even stronger to have a first mover advantage, even more in your case, because I assume, the more scientific user uses the platform, the better actually the results become over time. So I think being the first mover in this sense makes a lot of sense and brings you a barrier to entry versus the new entrants. Then the second thing that I wanted to say about your company is when you operate in regulated industries like yours, or in, I don't know, for example, the financial industry, right? The brand that you're able to create, and this is generated by the early customer relationship that you got, being able to get, the top names that you have in your customer list, right? Very early on, brings you a big advantage. This is all about trust, and I think people forget how that, a business is not just about the product and the technology. It's also about all the things that you put together, the ingredients that you put all together around it to make it like a powerful business. And I think trust and brand are always underestimated in Europe, while actually in the US, people are putting much more emphasis on that. So, if you're able to create a brand that, people trust and that has this credibility because you have the top customers and you start building alongside them, I think it has an amazing power for the next years.
It's funny you say this. So I don't even know if you know this, but obviously the 3 co-founders I have our own scientific tech and product, right? And Diogo came from a UI standpoint of product design. And I remember the first investors ever going, "Are you crazy? Why do you have a product designer?" He's one of the first members of the company. And I was always saying that, hey, if it doesn't look like $1 million, it won't be worth $1 million. And that like reputation, that brand, that looks and feels of things, right? I mean, I wouldn't spend 200 grand buying a Tesla, right? It just doesn't look and feel like a premium car. So I can't sell it for 200,000 bucks, right? But I could probably sell a Tesla for whatever, 30, 40, 50 grand, right? If I wanted to move it up to that level of market, I would have to change the looks and feels. Same for us. We knew from day one, we are not going to be a cheap product, right? We couldn't position ourselves that way just because otherwise you're not adding value. So there's a lot about countersense that people think on building a brand that has that reputation and value from very early days. And you have to be contrarian in the way of thinking. And also bear in mind that in our health space, most companies have built very bad UIs, right? We are traditionally known for, sorry for saying this, very shitty UIs, right? That are not user-friendly, not attractive at all for the users to use, which Biorce somehow always challenge that status quo. But maybe bringing you to your earlier point on how first movers advantage is undermined in European markets, we've actually seen the opposite side too with OpenAI and Anthropic, or Google really, both of them challenging OpenAI from a first mover standpoint and saying, actually, we could come out and do better. And if I double click on using Anthropic as an example, they said, yeah, great, the technology is good, but we can stay ahead of the curve by launching a desktop app, by launching a vibe coding that is user-friendly for both coders and non-coders to use. And that ability to stay ahead of the curve has been something that they were able to do, right? Bringing you back to the point I was telling you earlier, it's like, if you really look at it, they were able to forecast demand before demand existed, right? So back to what I call TAM versus TAP, right? What is the total addressable market? What's the total addressable problem, right? How can you shift consumer behavior by launching products, right? And then that means also, how do you value a business that is changing the product, the consumer behaviors versus just addressing a fixed market? How do you address this as an investor?
This is a very tough question. I don't know if I have a very clear answer. So I will give you, what's on my mind right now. I think it's when I think about the best companies I've backed over the past 10 years, these are companies where actually the founders can predict the future much better than the others. And most of the time where actually I regretted not investing in some companies, it was because I could not actually project myself in their vision, right? Not predicting the future enough, underestimating the time, and etc. So when I think about your company, AI is creating its own market because it's not tapping into the SaaS budget, it's tapping into human labor. And so I think this is where the equity story is very powerful, right? Where you need to make sure people understand that what you're building is a platform shift and that it's creating its own TAM and that this TAM is really huge.
Yeah. So I absolutely agree but I do feel like, and if we use Uber as an example, right? We wouldn't take a cab for a 5-minute ride, but we take an Uber for a 5-minute ride just because it's so easy to use, right? So the consumer behavior completely shifted. It's just by ease of use, right? I mean, we wouldn't send emails like we do now just because smartphones are in your pocket all the time and you can use it for any purpose, right? Even let's look at fintech. You wouldn't buy and sell stocks on a normal person wouldn't buy and sell stocks randomly on the day. Today, it takes you, 3 minutes to buy a stock, maybe less, if you want to do it. So the behaviors of consumers have drastically changed, right? And that was impossible to calculate, right? Pre-Revolut, pre-Konto, pre-Trade Republic in Europe terms, how could you predict that a bank would make so much money on just share transactions of buying and selling shares as they do today, right? If you look at, I think it was Revolut as an example, their amount of revenue from transactions of equities went up by like over 40% year on year in Europe, which we are also not the typical market to buy and sell shares often, right? The US is traditionally known much more for that. So again, taking back the investor's hat, how do you think about these changing behaviors being followed by these products that are completely disruptive to the market? And how do you try to convince yourself, because more importantly than anything, you need to believe that the AU will be capable of doing it, to be able to put the capital behind it?
Yeah, there is no one size fits all answer to this question. It's really on a one-to-one basis. I think as I started to answer to the previous question, it's really about the founder, right? The founder has to be very clear and articulated, and um, to convince the audience that basically this user shift will happen, right? So of course there is the vision, and this is early stage kind of backing. We are in growth stage investing, so what we would seek on top of the conviction from the founder is obviously some data point and evidences. So what we do is talking to customers, understanding how they use the product. We've done actually some work on Biorce, you know that. And what I can say is that when we talk to people, they're like, I will quote one of the customers without naming them. They said, "This is revolutionary. I don't know how we will do it, how we could actually go back to how we were doing things before." So for me, this is just the proof point I'm seeking when I'm calling customers, that this is such a huge pain point. The ROI is so huge, and the ease of use, as you said, like the design, the UX, and etc., makes, I would say, the behavior shifting very easily, and there is no way people will go back to doing things differently. It's a bit like if you were thinking people were using houses, and then they had cars, and some of them could say, oh yeah, maybe, we'll stay on horses, da, da, da. No. Once you have a car, you want to have a car. Like, you transition to the car. For me, it's the same thing for Bios. Like, there is no point that people will go back to the old ways of doing things, because, it's just not the way you should think about it if you're an ambitious company.
I was wondering where to drive next, to go to SaaS or to go to agentic SaaS, or AGAS as Jensen calls it. But maybe let's go to AGAS. In a world where agents are displacing workforce, right? How will companies be able to, one, keep governance in place where decisions will be made by AI, and two, be able to evolve at the pace that the technology is evolving, right? Because you said yourself, as a fund, you're changing every month what you're looking at because it's evolving so quickly, right? How can a company put a policy in place that by the time the policy is approved, it's already outdated?
It's a very good question. I was in San Francisco last week meeting with some of the best founders from the Silicon Valley, with some portfolio companies, and trying to understand, this shift, what great looks like from there, because obviously they are in advance, right, versus Europe. This is not a surprise. And my take on this is that if you start putting policies on stuff that are not yet understood and not yet, I would say, used at the full potential, you will kill the innovation. This is a bit, where Europe has been lagging versus the US, right? So my discussions today with portfolio companies and with these people last week in San Francisco is just invest in AI, like ask people to use it on a daily basis, make it like the top priority for the whole business. You don't care if it's marketing, if it's R&D and etc., but just everyone has to use it. So everything starts with usage. It's like a consumer app. You won't monetize before actually you get the usage, up. So for me, this is first like a bottom-up kind of approach where you need to empower people to train them to make sure that there is the usage. And then you start top-down looking at, yes, governance, policies, obviously productivity, right? Because you don't want to throw money at tokens when the ROI is not there. The security point is a very important one, and I think all companies are starting from there, but it's not preventing people from having this bottom-up approach where everyone is testing and adopting AI.
The limitation still remains the governance, though. Who's making the decision behind the AI these days? In the sense that, the CEO of a Fortune 500 company that is asking OpenAI or Anthropic or whichever other model, hey, I have this problem, what should I do about it? Gives 3 ideas, thinks that this is the best one, goes on and does it. How can you trace back these decision makers or decision-making processes, especially in industries like ours that is highly regulated, right? Where you should have traceability of every decision.
It's very tough. It's the question that everybody is asking themselves. So I'm not sure I'm the right person to answer this one. At Eurazeo, I can tell you what we are doing. So we have a committee on AI, bringing people from different strategies, from actually the exco to think about it. However, it did not prevent us actually to starting bottom up, as I said. But yes, you need to put all of this in place for sure. I think we've come through 2 years of testing, adopting, driving usage. And right now what we are seeing is more like rationalization, choosing one tool. For example, we were on ChatGPT and, Claude and then Gemini, and now we decided to go with Claude. So yes, at some point you will have to have the exco, I would say the leadership team giving the direction, like what tool you should use, what is the outcome we're expecting from these tools. But then you need to let people test and iterate on that. One question actually that I was asking to the former founder of Strava last week in charge of product is, how do you know what great looks like in an R&D organization today with AI? Because you don't have any benchmark, right? So how do you know actually how to have the best performing R&D organization? And so it told me something very interesting, which is, so I picked, my best performing engineers. I give them like AI, but without any limitation. And, I'm looking at the outputs. And if it's 5x or 10x, okay, this is the new standard. And then I come back to the team and say, okay, this is the new standard. And if you don't deliver 10x your results, it means that we need to discuss and to see how we can get you there.
Fully agreed, by the way. I look at lines of code all the time and the output from AI lines of code, and I'm like, I've never learned to program myself, and I output more lines of code than most of our programmers in-house. So I always tell them that until you beat me, you're behind. So you need to catch up. So I fully agree with him, and I do think that that's the future. One last question to ask you. How can we bring European markets to the same level of the American markets?
Thanks to you guys. We need more entrepreneurs that are very ambitious, that are bold, that are, courageous enough to leave their comfortable jobs in corporates and build again. I'm very optimistic about it because what I'm seeing around me is actually people leaving VC funds where they are very well paid to actually build again. I'm seeing people from the corporates as well coming back to building. I'm also seeing some former entrepreneurs or CEOs actually, building again. So I think we'll have an amazing wave of great companies from Europe in the coming years. The question is more like, where is our right to win? On the infrastructure side, it's pretty set, right? We have Mistral. We are investors in Mistral. It's a company I love, right? But you can see that Anthropic, OpenAI, Gemini, they are very good, and they throw a lot of money on. They have access to more capital, right? So they throw a lot of money on the compute, and they will own the full stack. So at some point, where it will go, I don't know. But I think we have a right to win on some topics, right? For example, on the application AI, I don't know why actually we cannot win. Once now that building a product is actually much less expensive, why not, right? We have less capital, so that's great. We have an advantage here, right? We build more efficiently with less resources. And the other thing is on deep tech and physical AI. We have a deep tissue of industrial companies. And for robotic in particular, it's very important to be close to your customers because it's an iterative process when you need to develop the product, to test it with the customer. It's a kind of co-development cycle. So I think on this particular topic, we have a right to win. And when it comes to the other industries, in pharma, for example, we have amazing pharma companies out of Europe. What you're building for pharma companies, I think, makes a lot of sense. And on this point, Europe, yes, we have some bottlenecks, right? Regulation is one of them. But then when you start building a company like yours from Europe with the right, I would say, architecture and all the regulatory components that needs to be built from day one within the platform, then you're pretty well set up to sell everywhere in the world. So in some cases, I think it can bring you an advantage versus the other players in the world.
Awesome. AC, thank you for joining us. It was a pleasure.
Of course. Thank you so much.